we have one big, beautiful distraction going on right now. I was on my phone the other day trying to find some information about the bill on YouTube. I'm also looking at creators, seeing what they're saying, what's working and stuff like that, right? And I noticed that all of the videos that went viral had one thing in common. All of them were about politics, red versus blue. And now hold on, because I'm not trying to say that politics don't matter. We do need to stay informed and we do need to look out for one another. But what's getting to me is that we have this bill, it's 900 pages long, and we have Congress people that are telling us at different stages of the process of the bill that they have not read it all themselves.
This provision was unknown to me when I voted for the bill.
So we have Congress people writing laws and not reading them. So with that said, it's going to be really important that we take the time together to break down what's going on in this bill and understand what's going on in the bill ourselves. So there's a few things that I've seen that will absolutely change the game when it comes to investing in the markets. Now, the funny thing is we also have to look at the timing, because right now in the markets, we have gold pretty much at all-time highs. We have Bitcoin taking off days after this bill was signed into law, a few days after, all-time highs. On top of that, this week is crypto week. So we have the Clarity Act and the Genius Act going through Congress. And meanwhile, just big picture wise, the Dixie is down 10% on the year. You know, we talked about, how imagine 5%. Well, it's actually down 10% on the year. And now, to be fair, it went up 10% in November last year. But that just means that we've got this thing bouncing around. The last time I looked at the data, the dollar actually did the same move in the last presidency. So after that first initial leg down, after it went up, it had a second leg down. So let's keep an eye out to see if we get another leg down in the dollar coming soon, because if that does happen, we've got risk assets bubbling off. S&P 500 also at an all-time high. Hey, no financial advice, but it looks like things are on the move. So let me tell you guys what I'm seeing in this bill. Okay, this one right here is interesting because earlier this year, we had the United States Treasury announce that they were hacked last year and that there was potentially sensitive information that was being leaked to specifically Chinese state-sponsored groups. And we heard about that maybe a little bit, but we never really heard what the government was going to do about it. Apparently, in this bill, we have the government spending $1 billion on different types of technology initiatives. Specifically, they are investing in cybersecurity defense systems, also in border surveillance technology. We also have autonomous robotics in naval shipbuilding and AI-enhanced drone capabilities. So, look, $1 billion is not a lot of money for the government to be spending. But at the same time, this is the government basically signaling, right, that they're willing to invest in AI for specifically pretty much administrative types of activities. So that's the first thing that I saw that was interesting. And I do think that that provides some support to the AI industry. We've got to think when the government starts spending money on things, usually first off, whatever amount they allocate, sometimes it ends up creeping up. And also when they spend money, it's usually sticky, right? So we're looking at, what are the Palantirs and Andurils and other companies that might start going public in the next few years, right? What's going on with them and what are their relationships with the government? Now, another big thing that I've been seeing that I haven't been hearing everybody talk about is these Trump accounts. So right now in America, it has been pretty hard for people to buy a home. Prices are rising and wages are not. Now, with that, the government is potentially trying to address some of those issues, and they've come up with this idea of these Trump accounts, where they're basically taking $1,000 for every newborn baby from the beginning of this year to the end of 2028, and they're they're actually automatically investing $1,000 into the broad equity market indexes. Okay, that's the only place that this money is allowed to go. And the government is basically giving this money to these newborn babies automatically. Families will also be able to contribute up to a maximum of $5,000 every year. And the idea behind these Trump accounts is for families to allocate basically towards these kids' futures when it comes to paying for higher education. But now what's different about this and other education plans like it is that at the end of 18 years, these kids can actually take that money and either invest it in starting a new business or put that towards purchasing their first home, as well as any educational expenses that they may have. So we're introducing kids to the concept of compound interest, right? Automatically, because the government's giving this money away, but then also allowing families to prepare this child to either go out and start a business or buy a home as well. Guys, I don't know about the political implications of this, so whatever you guys know and you guys think that there's something going on there that's important, let me know in the comments. But let's do some quick math. You've got about 3.6 million babies that are being born every year. So take that times 1,000, you've got $3.6 billion coming into equity index funds every year. So not a ton of money, but it is a consistent subtone that the government is pushing into the markets. And once again, guys, we'll see exactly how all of this works out in the end. Now, the biggest thing that I thought was the most interesting and that I had to dig to find was a few changes that are coming to the real estate market. In 2017, the Trump administration had the Tax Cut and Jobs Act. And in that bill, there was this new concept, a new program called Opportunity Zones. That program was designed to get investors to allocate long-term capital toward investing in building and also renovating projects in real estate within economically distressed areas. So that program essentially was being phased out until 2027. But in this new bill, they've actually taken opportunity zones, and not only are they not being phased out anymore, but they're actually being made permanent into the law. And they're permanently in the law that you, after 10 years of investing in one of these projects, you basically have no capital gains that you'll pay at the end of that 10 years. So that was the first thing about real estate that I saw in the bill that was pretty big. Now, the second thing is that we now have bonus depreciation at 100% permanently. So the way that bonus depreciation works is that when you have an investor wanting to go and buy a building, that building is going to have components of it that are going to depreciate over time, right? So say like a microwave or an oven or stove, things like that. Usually, when you buy this property, the IRS is going to allow you to write off the depreciation over time. With bonus depreciation, you're able to write off all of the depreciation in year one, which now allows real estate investors, instead of paying for taxes, right, once they're buying that building, they're able to take that money that they would use for taxes and invest it somewhere else. And a lot of times what they do is actually borrow money to do whatever renovations that they want to do, and then they will actually go out and buy more properties with the money that they have. So essentially, with all of this said, it looks like we're going to have a little bit more investment in the real estate market in the future. Now, when it comes to institutions, whenever you have a risk-adjusted after-tax return that is greater than what is normally available, you are usually going to take it. So I'm going to expect big money to start allocating a little bit more aggressively towards real estate in the coming years. What that may mean for markets, let me know in the comments down below. These are just a few things that I'm seeing that I think will have a big impact on the markets moving forward. But you guys, let me know what you're seeing on the ground floor in the comments down below so that we can share this information with one another.